Hello everybody. In this video, I am going to give an update on my portfolio and show you all of my positions. Let's get started. So right now my portfolio is worth $180,650.57. In the past year, I am up $28,649.67. Year to date for the year 2025, I am up $23,207.43. Today was a green day for me. I'm up $14,006.40 today. Let's go over my positions. For my options, I am selling Amazon $255 covered calls. These expire November 28. My return $2,667. I'm selling Delta Airlines $57 covered calls. These expire November 28. My return $2,860. I'm selling Google $280 covered calls. These expire November 28. My return, I am down $2,760.99. I'm selling Robinhood $125 covered calls. These expire November 28. My return, $30,830. I'm selling SoFi $35 covered calls. These expire November 28. My return, $7,104. For my cryptocurrencies, I have Bitcoin, Dogecoin, and Avalanche. For my stocks, I have 2,000 shares of Robinhood. Robinhood is at $108.90. My average cost, $135.72. My return, I am down $53,631.50. I have 6,400 shares of SoFi. SoFi is at $25.48. My average cost, $5.70. My return, $126,601.41. I have 300 shares of Google. Google is at $302.50. My average cost, $240.45. My return, $18,614.85. I have 300 shares of Amazon. Amazon is at $221.44. My average cost, $219.10. My return, $702. I have 1,000 shares of Delta Airlines. Delta Airlines is at $58.57. My average cost, $56.64. My return, $1,925.07. This is a margin account. My margin buffer is 16.82%. My margin buffer indicates how close I am to a margin call. The higher the buffer percentage, the lower my risk of getting a margin call. 16.82% is closer than I was before. However, it is still above 5%, which I think Robinhood was using before to determine whether you were high risk or not. So 16.82%, I'm not quite there yet in terms of being in danger of getting margin called. At least I don't feel like it. I feel fine right now. So I think I'm okay. But I'll let you guys know if I do get below 5% margin buffer and get really close to getting margin called. But for now, 16.82% margin buffer. Let's see here. The interest rate that I am paying, my annual rate is 4.75%. The daily interest that I am paying is $53.56, and I'm using $1,000 of margin interest free. My margin used is $406,965.04, and my margin available / my margin buying power in my account is $78,651.02. So the market not doing so well. My portfolio has gone down quite a bit in such a short amount of time. If you take a look at where it was on November 12th, that was like only 9 days ago. I was at like 248, close to 250K. I went from, so let's say I'm around 250K. I went from 250K to 180K. That's $70,000 in a little over a week, pretty much a week. I mean, going from 250K down to 180K in about a week, it's insane. That's a lot of money to lose in such a short amount of time, but that's what's been happening. So November 12th, I was around 250K, and it's gone crashing down. Oh my goodness. At one point, I was even at 163K. This was on November 21st. Wait, when was this? In the morning? Yeah, so around the morning. Even lower than that. At 2:30 a.m. overnight, I was at 150K. Insane. Crazy amount of money to lose in such a short amount of time. But since then, throughout the day, it's recovered to 180K where it is right now. But oh my goodness, yeah, it's been crazy lately. Yeah, as you can see here, in the past week alone, down $40,000. And like I said, since November 12th, the high of my portfolio, it's gone crashing down. Now, something I want to point out, because this question does come up sometimes in my YouTube comments. People sometimes ask, why are you doing a in the money covered call? And I think a good example of this is my Robinhood covered calls. At the time that I did these covered calls, it was below the share price of Robinhood at the time that I sold these initially. When I bought Robinhood shares, I bought them at an average cost of $135.72. So I got them for around $135 per share, but then I did $125 covered calls, which was below $135. So these were in the money covered calls. And some people, were questioning, why are you doing in the money covered calls instead of setting a strike price above $135? Like, why aren't you doing like $145 or $150 covered calls? And this is a good example of that, because Robinhood came crashing down, and right now it is at $108.90. So in the past month, it has gone crashing down. It was at like 150 at one point. Yeah, it was around like 150 at one point, and then it came crashing down. And I think this is a good example of when it's actually better to do in the money covered calls than out of the money. Because if the underlying share comes crashing down, you actually are better off if you sold a covered call with a lower strike price. So if you look at this, my Robinhood $125 covered calls, look at what the total return is right now. $30,830. So because I sold these Robinhood $125 covered calls, I made a return of $30,000 from selling these covered calls, which kind of offsets, not the whole thing, but it kind of offsets some of the loss than if I had not done these $125 covered calls. Because from the shares alone, I'm down $53,000. But because I sold those $125 covered calls and I made $30,000 off of those so far, really, in total, I'm only down $23,000, not $53,000, because it's offset by the $30,000 that I made so far from my covered calls. So as you can see, it lessened the blow a little bit. Like, it lessened the amount of money I would have lost had I not done those covered calls. And especially if I chose a higher strike price, I would not have made $30,000 profit. I would have made much less than that. So I'm glad that I chose a strike price that was lower, because if the underlying share crashes like the way the Robinhood did, then I actually am better off because I chose a lower strike price. And sometimes that's what happens. That's what happens sometimes. You do a covered call with a very low strike price that's lower than the current share price, but then the underlying shares crash, and then you're actually better off because you chose a lower strike price. And this is a good example of that. Some of my covered calls, actually, the underlying share is above the strike price right now. So for example, Delta Airlines, I chose a strike price of $57. Right now, Delta Airlines is at $58.57. So it's above the strike price that I chose. And if it stays that way till expiration, then my Delta Airlines shares will just get called away. And then I'll end up making some profit. Same thing with Google. This one did not crash at all. Google did not crash. Google's doing very well. Oh my goodness. Yeah, look at this. Oh my. Instead of crashing, Google's going up. Oh my goodness. So this is an example of something that did not crash. And if Google stays above 280 at expiration, then I'll have my Google shares get called away. Do I want that though? I'm okay with it. I mean, that frees up the capital so I can spend it in other ways in my portfolio. But yeah, those two I think are the only ones that have the underlying shares above my strike prices right now. Amazon is below 255. Robinhood is below 125, and SoFi is below 35. So yeah, for Amazon, Robinhood, and SoFi, the underlying shares are below the strike price, which means if it stays that way at expiration, I'm going to keep my shares. And then, I keep my profit that I made off of the covered calls, but I also keep my shares as well, which, to be honest, that might be a blessing in disguise in the long run, because is Robinhood going to recover and go back above, 125 eventually? I think so. I mean, same thing with the SoFi. I feel like SoFi will eventually recover and go back up, but we'll see. I don't know. This market is wild. It's been a wild ride this year. And now I'm not even sure if I'm going to end up green at the end of the year. I went from like being so high up, being at such a high profit. Yeah, at one point I was up $91,000 for 2025. But now, if this crash continues, I might not even be green for the year. I might not have any profit for the year if this crash continues. And just like I showed earlier, I'm heavily in margin. I'm using over $400,000 of margin right now, which is an insane amount, especially for the average person. Now, for me personally, I'm very comfortable using margin, so this is a lot of margin, but I don't feel like it's too much for me. In fact, I still have $78,000 left to use, which I'm deciding not to use right now, just because if I had put this money into something and it crashed like everything has recently, I would be in bigger trouble than I am right now. So again, another blessing in disguise that I actually did not put this money to use and just left it there. But man, I don't know. I'm pretty sure for most of you guys watching, you guys think that $400,000 of margin is insane. And maybe it is. Maybe it is insane, but I am insane. My risk tolerance is insane. So it is what it is. All right. That's pretty much it for this portfolio update. I don't have anything new in terms of what I'm planning to do in the near future. These expire on the 28th. Right now it's the 21st. So 1 week from now, these will expire. And I think, as far as I know, I think the market is closed on Thanksgiving. I think. I'll have to check up on that. But if that's the case, then it's not even going to be a full 7 days 7 business days. It'll probably be only like maybe 3 or 4 days, really. Anyways, that's it for my portfolio updates. I'm just planning to let all of these expire on the 28th and not do anything to them. And if my shares get called away, they get called away. If I keep my shares, I keep my shares. I'm planning to just do nothing. So that's my plan with these ones. I'm just going to do nothing and let them do whatever they do. All right. I'm going to make more updates in the future. So if you guys like this type of content, please make sure to like and subscribe, and I'll keep on making these videos. Thank you so much for watching, and I'll see you guys next time. Bye.